$94,000. That's how much your buying power swings in Clark County on exactly the same monthly payment, depending on nothing but your interest rate. And if you're VA eligible, about $20,000 of that's sitting on the table for free. As of Friday, July 24th, 2026, the average 30-year conventional rate was 6.81%, and the average VA rate is 6.39%. 4/10 of a point, 20 grand. By the end of this, you'll know exactly how much house you can afford in Las Vegas at today's mortgage rates, exactly how many dollars your buying power moves and rates move, and whether buying now or refinancing later actually pencils out. And the number that should decide the buyer wait call isn't a rate at all, it's a count of months. I'll get to it in the last few minutes. Let's start with where the numbers actually sit as of July 24th, 2026. A 30-year conventional runs 6.81%, VA runs 6.39%, and FHA runs 6.37%. I don't know why they're ripping my veterans off, according to the Mortgage News Daily Rate Index. Those three numbers are what everything else in this video is built on. Freddie Mac's weekly survey lags a few days and comes in lower at 6.58% for the week ending in July 23rd. Your own quote depends on your credit, your down payment, and your lender. I won't tell you where the rates are headed. Nobody really knows. Not me, not the guy on the television with the charts, not the loan officer who says, lock in today because rates climb tomorrow. Anyone who claims to know is selling something. Everything ahead runs on the July 24, 2026 numbers. If you're watching weeks from now, the framework holds and the figures don't. Pull fresh ones. How much house can you afford in Las Vegas right now? At 6.81%, a $3,000 monthly principal interest carries a loan of about $459,700. With 5% down, that's roughly $484,000 in purchase price. Now, the arithmetic behind it, that's what matters. Budget as a payment, not as a price, because the payment is what you actually live with. $3,000 a month in principal and interest, not your total housing payment. Property taxes, insurance, and HOA dues, they stack on top of that. So build a real number with a lender. And of course, a little bit of help from your agent, but remember, they're not lenders. Drop that July 24th rate a full point to 5.81%, and that same 3,000 carries about 510,700. That's $51,000 more loan for an identical payment. Push a full point in the other way to 7.81%. And remember when we hit back then, and it carries a $416,300 payment. House, $43,000 less. The same buyer, the same payment, and $94,000 in swing. That's not one home price move. There's a rule, and I ran this math myself instead of repeating what I heard at a sales meeting. At this rate range, every full percentage point moves your Las Vegas buying power by roughly 10%. Every half point moves it about 5. Put that up against what houses actually cost here. Las Vegas realtors put the median price of an existing single-family home in southern Nevada at about $490,000 in June of 2026, matching the record set in May and up 1% from June of 2025. Condos and townhomes came in at $292,000, which is down 4.3% from a year earlier. $3,000 a month gets you about $480,000. The June median was $490,000. So, you're right in line. Stay with me, because the next section has the number that stops move-up sellers cold, and it explains why more than 7,000 homes in this valley sit without an offer. These rates don't land the same way on every buyer, and the spread between buyer types is wider than most people think. Start with VA buyers. Since it's a big share of who I work with, I flew KC-135s in the Air Force before I moved on to MQ-1s and MQ-9s up at Creech. And I've done the PCS dance myself many times. On July 24th, the VA advantage over conventional loans is 0.4%. On a $3,000 principal and interest budget, that's about $20,400 of extra loan. Stack zero down on top with nothing down, your loan amount equals your purchase price. It actually can equal a little bit more, but that's another story. We're going to get deeper into it. A conventional buyer putting 5% down needs about $24,000 in cash for that $484,000 home before closing costs. You need none of it if you arrive on orders with household goods shipments in transit and a rental deposit already gone. That gap decides if you buy this quarter or next year. Now the point nobody puts in an ad. The VA funding fee is real money. First use with zero down runs you about 2.15% on the loan, and that's about $10,500 on a $490,000 home. Subsequent use runs 3.3% or roughly $16,200. Most buyers roll it into the loan. That's what I was talking about, a little bit more, and pay interest on it for 30 years. If you draw any kind of a VA disability compensation, you're exempt and you pay nothing. Confirm your exemption status before you do anything else, because that one line moves your number more than shopping 3 lenders ever will. And zero down means zero equity on closing day. Sell inside 2 or 3 years and you can end up writing a check at the closing table. For a family that could get orders again, that isn't hypothetical. One more thing before we leave the VA material. If you're move up shopping instead of PCSing, hang on, because there's a number coming that will explain why your neighbors won't sell. First time buyers, your lever is the buydown. The 2-1 buydown from a rate of 6.81% means you pay as if your rate was 4.81% in year 1, 5.81% in year 2, then 6.81% from year 3 forward. On a $460,000 loan, 30-year fix, year 1 runs about $2,416 a month instead of $3,002. That's roughly $586 a month back your budget. Year 2, you keep about $300. That buydown costs somebody roughly $10,600 up front. Sometimes a builder covers it. Sometimes the seller does. I broke down which Las Vegas builders are offering that buydown in a video, and those programs change monthly. So confirm current terms first. On the side, a buydown is temporary, and you still have to qualify for the full note rate, so it won't get you a bigger house. Builder paid incentives usually get priced into the home. Some people say that, and sometimes the builders are like, hey, we're giving this money up, we're giving up profit. Who knows who's telling the truth? You're trading a lower payment now for the possibility of a higher payment, according to some people, and a slower climb to equity. I'm going to tell you right now, many times the trade is worth it. Maybe sometimes it isn't. Run both numbers before you sign. Notice what every one of these levers has in common. They assume you'll refinance out of this rate someday. Hold that thought, because in 2 minutes, I will show you what that refinance actually costs, and the numbers are worse than most people expect. Move up buyers. This is where the lock-in effect lives, and this is the number I promise you. According to the Federal Housing Finance Agency data through the first quarter of 2026, 19.5% of outstanding mortgages carry a rate below 3%. Another 30.4% sit between 3 and 3.99. That's just under half of all American mortgages being under 4%. Add the 4s and the 5s, and roughly 78% of mortgage holders pay less than 6%. That's why your neighbor with the 3.1% loan hasn't listed. Trading a 3% mortgage for a 6.8% one on a bigger house is a payment shock most families can't absorb. And wanting a bigger yard, a lot of times ain't gonna fix that. You can see the results locally. Las Vegas realtors counted 7,147 single-family homes listed without an offer at the end of June, up 2.2% from a year earlier, plus 2,690 condos and townhomes, up 4.9%. That pace works out to about 3.5 months of supply, and 78.5% of the existing homes sold within 60 days, down from 82.8% a year earlier. More homes sitting means more negotiating rooms for a buyer who's ready. That matters double if you're buying on Nellis court-bound orders or a creature assignment and haven't set foot in the valley yet, when a home sits, you can write an inspection contingency. As a matter of fact, you should always write one. As for the repairs off a video walkthrough, and especially after getting an inspection, and still get the house. In a bidding war, none of that's available to you. And right now, unless it's an absolutely spectacular home, right price, there are no bidding wars. Now the uncomfortable part for move-up sellers. If you own a mortgage under 4% of your current house still works, the move often doesn't pencil out. I've told people exactly that and watch that commission walk down out the door, but fortunately I got my retirement check and my VA benefits. Staying put is a legitimate answer, and anyone who won't say that out loud is working for the closing table and their pocketbook. So should you buy now or refinance later? Only if today's payment works without the refinance. You've heard the phrase 100 times, marry the house, date the rate. There's truth to that. Your rate is refinanceable and your purchase price is permanent, but it quietly assumes rates will fall and you'll still qualify when they do, and that refinancing is free. None is guaranteed, and the last part can be flatly wrong. Here's that count of months. Take a $460,000 loan at a July 24 rate of 6.81%. I keep talking about 30-year fixed. Principal interest runs, as we said, about $3,002 a month. Finance a full point lower at 5.81%. Your payment falls to about $2,702. Now, you save $300 a month. Refinance closing costs can run from 2 to 5% of the loan amount. That's why you got all these people. If you have a home, they're just calling you. Don't you want to refinance? Don't you want to take some money out your home? It's because a lot of that fees go to the bankers, okay? On the low end, 2% of the loan is $9,200. Divide $9,200 by $300 a month, and you get about 31 months. 2.5 years just to break even. At 3% in cost, you're at $13,800. And you're looking at 46 months. Almost 4 years. 31 months. That's the honest version of dating the rate. A full point drop is a big move, and it still takes years to pay for itself. Now, we'll be upfront about this. Some lenders have a program where it's like if you refinance with them, they don't charge you. And it was kind of like the whole thing is like, oh, go ahead and, marry the house and date the rate, because if you refinance within a certain period of time, we'll do it for free. That was to get you into that loan, get the money right then. Okay, now if you're PCSing in 3 years, that refinance may never break even at all for you. The real question was never where rates are going. It's this: does today's payment work for your budget today at today's rate with no finance in the plan? Because sometimes you go like, okay, I'm going to refi and get my lower payment. But we talk about what does it cost. It's like I remember when I was stationed in McConnell and gas prices went up. One of the boom operators in my squadron, he goes and he sells his truck to buy a less expensive car, or at least a less gas guzzling car. And I'm sitting there looking at him. It's like, this gas was killing me. Gas was $1.23 back then, man. This gas is killing me. It's like, so you sold your truck, you took a loss because everybody's selling their trucks right now. He had a Ram 2500 to buy this fuel efficient car, which the prices were actually up on them because everybody was doing it. But it's like, look what I'm saving on gas. But look what you gave up. You sold your truck at a loss and bought a car at a premium. Just thinking, okay? Run the numbers that way. If you're clear, the math works and you can buy without needing to forecast a bailout. Your rate can drop later. It becomes a bonus instead of the rescue. If they don't clear, the math doesn't work, and no prediction changes that. Make sure you have a reserve, clean up your credit, and come back when it does. Want your real number instead of my examples? I'll run a buying power analysis for you. Tell me a payment you're comfortable with, and I'll show you what it buys across the valley north, which is, of course, Las Vegas, North Las Vegas, and Henderson, and, of course, now Pahrump. At this week's rates, if you're PCSing to Nellis and that clock is running out, you can be, of course, buy sight unseen. I do that a lot for my military clients. That's the version I run the most. I'll also introduce you to a lender who can quote you a real rate, because every number here is an average, and the average isn't your rate. Comment buying power below or use the link in the description. And I'm going to do it about right now. Just real quick, little QR code here and down in the pinned comments. Easy to get in contact with me. I've helped over 100 families work through this exact math here in Las Vegas. Some bought, some waited, some did other things. Both calls were right for the family. That all the calls, are right for the family that made them. So here's the bottom line. This is all about you. It's not about the lender. It is not about the seller. Unless you're a seller looking at this, you can see where the buyer's mind is probably at. And it's, of course, is not about your realtor. It's about making sure you get the home you deserve. Okay? So I'm going to wrap it up. And for my military brothers and sisters, you know the drill. Alpha Mike Foxtrot. And while I'm saying this, this is popping up again because about half you're watching on TV. So you're not going to be able to just click down below or anything. There's a QR code for you. Get you in contact with me. I also have a whole bunch of resources for you. So go ahead and click that. For the rest of my audience, who is actually the majority of my audience who have never served in the military, I love you. And we're going to keep the lights on for you. And I can't wait to help you out if you need any help from me. Now, according to YouTube, somewhere up here, it's going to be popping up the next video. And the algorithm says you want to see it. Can you do me a favor and help me grow my channel and help me reach even more people and meet me over in the next video? I can't wait to see you over there.